Alright everyone, so in this video I will be using my Advanced Candlestick Theory method. What Advanced Candlestick Theory is essentially all concepts from SMC and I.C.T. and really any other concept under those two umbrellas that can be paired along with daily bias, scalping, whatever the case may be, or whatever it is that you're doing. You can even use things like Elliott wave. You can also use a Wyckoff as well. And the point is to use all of these things to find at least one setup inside of each candle or each time frame. And as you know, each time frame is represented by one single candle. Now, if you haven't seen my video on this, I suggest you check it out so that way you can see or have a little bit of familiarity on what it is that I will be doing here. And if you haven't seen any of my previous daily bias videos, you must watch them before continuing on, because a lot of these models and concepts that I paired my daily bias stuff with has to do with all my other previous videos. So if you haven't seen them, you're gonna have a very hard time following this. So please watch those videos beforehand. Now, when it comes to trading with this model itself, you have to understand that kill zones are definitely required. You can try trading it without kill zones, but that is on you. Okay, all of these requirements and all of the things that I have outlined in this checklist is because I already back tested this type of bias model extensively. So you have to do your best to follow what I have here. But at the end of the day, it's up to you, and if you want to try something else. Next is you can take up to 2 trades max per pair or per asset. You know what, I'll just add it on here now just so you guys can have it. But yeah, any asset that you're trading, please try not to take more than 2 trades. Keep it at 1 if you can, but no more than 2. All right, and that's including your losses. Next, for a break-even system, no, you do not have to go break even if you don't want to. It doesn't really do that much of a difference, but if you want, you can try. If you haven't seen my previous video on Model 1B, you can see how I use a break-even system there. And on my future strategies, I'll show you different kinds of break-even systems that you can do. But yeah, try not to go above 2RR if possible. Next, you can trade news with this type of bias, but as always, don't trade during NFP, FOMC, or CPI. Next, what other models can you use with this type of bias system? So you can use like a pitchfork, daily open. You can use like an opening time frame like on the 12-hour, right? So you can use Advanced Candlestick Theory on like a 12-hour time frame, which is really good. I love using the 12-hour for my weekly and even daily bias. You can also use Model 1B as I mentioned earlier. Next, yes, you can use all current scalping and intraday trading strategies and future strategies unless told not to be used. So yes, any strategy that I already made, you can also pair it up with this type of bias model. And lastly, this can work on any time frame, even the 5-minute and lower, but you must use stronger confluences on the lower time frame. And what I mean is you can trade any time frame you want with this type of bias model. It's just that once you start going around the 15-minute time frame, the 5-minute time frame and lower, you have to use a few more confluences or confluences that are generally a little bit more stronger. So something like a unicorn model, 1 or 2 inverted for value gaps, change in state of delivery, some candlestick patterns, etc. I have a video on different types of confluences that you can use for entering a trade. I'll link it down in the description below as well. And next is this does trade best with futures and indices, and it also works on Bitcoin. Now, you can try other crypto assets if you want, but you have to backtest it, okay? And lastly, if you want a strategy that can be paired with this type of model, you can use Sir Pickle's strategy, and I will link his playlist down in the description below. And you can essentially pair this type of trading strategy going from IRL to ERL, and trade using that, right? So it's not anything difficult. His channel is really good, and he explains his strategy in pretty much good depth. Now, if you haven't joined the Discord, I highly suggest you join the Discord. And if you are looking for a good back testing software, I suggest using, if you want something very basic, you can use something like TradingView, and then from there, if you want, you can go up to something like Traders Casa. Their plans are a little bit more affordable and they're really good. I personally like using Traders Casa. And lastly, if you want, you can also use FX Replay. That's for a little bit more advanced analytics. If you're someone that wants just a little bit more information on your trading strategy, then definitely use FX Replay a little bit. It's a little bit more expensive in the sense that it's a couple bucks more. It's not anything crazy. But if you want to join either one of those platforms, you can check my links in the description below. I also have discount codes that you can use when you sign up for them. And yeah, with that being said, let's get into the model itself. Okay, so the first variation of this model is going to be an extremely simple one, and then I'll make it more advanced as I go through the video. But the more advanced it gets, the stronger this model becomes. Okay, so for the first version, I don't know if you can see it, but I have my New York AM kill zone activated. So this one's from 7 to 10. And real quick, and yes, I did cherry pick the examples, but I'm only doing this to get through the video a little quicker. What you're seeing here is the 4-hour candle. So these dark shaded green areas is the body, and then the light shaded areas here are the wicks. Okay, and I will link in the description the indicator that I'm using to highlight them. It just makes it super easier for me. Now, yes, I will be using the 4-hour candle as my starting off point, only because the 4-hour candle is really good for this. Okay, but like I said, it'll get more advanced as the video progresses. Now, how do you find trades with this? So essentially what we need is for the body to close over the previous candle's body high or the wick. It's even better if it's over the wick. So for instance, you can see here that the body closed over the previous 4 candles wicks. Now if it closes over just the body itself, like on this one right here, that automatically brings it down to a 50% chance that the next candle will be bullish. But if it closes over the previous wicks, it gives it like a 90% chance that the next candle will be bullish. Okay, so just keep that in mind. And as you can see, once this candle's body closed over the previous wick, the next day was bullish. Now, how can you capitalize on this? So if we're just going to use the 4-hour candles, what we want to do is wait for our kill zones. Okay, 7 a.m. And what we want to do is use the previous candle as a area to where we think price will retrace into to find a reaction. Okay, now yes, you can look for order blocks on previous candles, but it's a lot easier when you're just using just the previous candle for areas that are points of interest. So here we can mark up things like for value gaps, order blocks, so on and so forth. Let me turn this on real quick. So right here, very obvious fair value gap, right? So we're just gonna mark this one up. That's one fair value gap, and then we have another one down here. I know it seems like I have a lot going on, guys, but bear with me here. I'm just gonna turn this off now. Okay, so we're going to just look for price to react somewhere on these fair value gaps and then give us momentum that says, okay, we're gonna go back up. Now, I also want you to see this. Liquidity here was swept. Now, what do we have here? Price tapped into it, rejected once, but not strong enough to engulf the previous candle. Price came down, tapped into the rest of the fair value gap. Now we want to see some more momentum, something that's shifting. As you can see, the candles are getting progressively weaker, more wicks, right? Smaller bodies, big engulfing candle. That for me is more than enough. Stop loss, I'll put my stop loss under this one right here. And then you can target this high. You can target that high right here, the high of this candle. And I think we should be good. Bam, TP, right? 1.92 RR, nothing crazy, right? It's that simple, guys. It's really that simple. You don't have to complicate it. You don't have to do any extra steps. You can add whatever confluences you want. Just make sure you're analyzing the candles properly. Okay, make sure that the previous candle body closes over the wicks. Make sure that if it doesn't close over the wicks but just closes over the candle's body, just remember it's a 50% chance it's going to play out, and it's going to apply on all time frames. And like I said, this is a combination of I.C.T and SMC. So I.C.T really is the one that came up with this very basic concept of daily bias. But like I said, I'm going to pair it up with a few more things as this video progresses. Okay, so with that being said, let's move on to something a little bit more advanced. Okay, so for this model, we are going to pair up the daily candle with the 4 hour. So as you can see, price closed over the previous day, right? Okay, this candle closed over the previous day, nice strong candle. Then this candle closed over that day. So what we want now is to look for candles that are going to be bearish 4 hour candles. Okay, that's what we want, bearish 4 hour candles. And what will make it even stronger is if it's over the daily line, right? And we'll add it to the bottom. Okay, so now we're just gonna go down here to the 4 hour, and what we want for the next 4 hour candles to be under. So here we go, under the daily line, 1 4 hour here, closed over the body but not the wick. So we wait for another candle to close over the body, which we did have. So now that we have that confirmation here, we're going to drop down to we'll drop down to the 5 minute again. Now what we want is something that says, okay, you guys, you're ready to jump in, we're good to go, and we're going to make it easy. We're going to start from here and see if we can get a retracement somewhere above the 50% only or near it, so that way we can look for a short. Okay, strong engulfing candle. You can either enter or wait. I'm gonna wait. I want to actually adjust my fib one more time, and I also need, is my kill zone even on? So we need to wait for our kill zone first. We're still under the daily line. Okay, so what do we have here? The candle closed only above the previous 4 hours body, not over the wicks. And so for me, that's still valid as a bearish setup. I'm still looking for bearish setups, okay? Plus we're under that daily line from the previous daily candle. So for me, this is more like areas of liquidity getting swept over here, for value gaps being tapped into, like this one right here, right? Really well respected. So I'm still bearish. I have a lot of reasons to still be bearish. And like I said, we are in our kill zone. I could see this as a setup already because of this inverted fair value gap right here, IFVG. So let me wait for one more candlestick rejection. That's what I need. Entered here, stops at this high, and we're gonna go for this low right here. That's 10x. Okay, perfect. As you can see, TP was hit. I hope I adjusted that right. So yeah, really easy, guys, right? We had the confluence from the previous daily candle. We assumed that because of these previous daily candles that the next day would be bearish, so we went down, looked for some 4 hour candles that were under the daily opening line, analyzed the body, see what was closing over the wicks, right? And then once we saw this candle right here that closed over the previous 4 hour wick, we went down to the 5 minute, turned on our kill zones, and waited for a setup, which we inevitably found. Price respected this fair value gap right from here. Some liquidity was getting swept. We found an inverted fair value gap during our kill zone time. We entered, and what did we get? Profit. Easy money. So now I'm going to show you something a little bit more advanced, but don't worry, I'm going to try making it as easy as possible. Okay, so making this a little bit more advanced, we're going to use the monthly time frame as our starting time frame. And what you will do is look at the previous 3 candles. Now you can also look for the entire overall market structure to see where you're at if you want. But for now, to make it easy, we can just look at the previous 3 candles. Now, as you can see, this candle closed bearish, and it did not even close over the previous candle, the previous monthly candle, and that gave us a bearish month. And the candle here closed bearish over the previous monthly's candle or candle wick. So what does that mean for us? It means that we want to start looking for bearish weekly candles and bearish daily candles. So the easiest thing that we can do it's dropped down to whatever time frame it is that we're planning on trading on. And to make it easier for us, we're going to turn on this indicator, which I will share in the description below. Use it like this. So essentially what this will do is give us our daily, our monthly opens, our weekly opens, and let's see, yes, our daily, weekly, and monthly opening lines. And what we want is, since we know that we're going to be bearish, we want to trade under those specific conditions. So what we want is this: we want weekly, the daily opening lines to be under the weekly, and for that weekly to be under the monthly opening line, as you can see here, right? So once we find setups that align with all of this, we should be good to go. So daily open, right? Plus it is Sunday, so Sunday/Monday open. So what we want is to look for bearish setups under those conditions. And no, you don't need to add the 4-hour candle if you don't want to, unless you want to. But to make it easier for this example, we're not going to add that. So just gonna let it play out a little bit. So okay, we have the daily, weekly, and monthly opening line, but it doesn't look that good. So we should be looking for bearish setups. So as you can see, we avoided a loss there. So now we have daily again, but the daily is above the weekly/monthly open. So we don't want to trade during that. We want everything to align. So we're gonna wait for the next day. Okay, so we have the daily under the weekly, and the weekly is under the monthly. So now we can start looking for some bearish setups. Again, guys, this is just the daily open, so it's opening under all this. And what do we have? We have our kill zone alignment here. So it's 8 a.m. Price looks like it reacted off of this area here. So let's see if we can still get into a trade. And I'm just trying to see something that says, hey, it's time to go down. All right, I'm gonna try holding a position here and go for a 2R. Now this position is gonna be intraday/swing, or you know what, let's just go for a 1 to 5 just to make this a little quicker, considering that we are holding it for a day or two. Did I get stopped out? Yes, I got stopped out. Okay, that's okay. We'll just wait for another setup. Again, same criteria does not change. I gotta stop letting it play so fast. So what did price do? Reacted off of these fair value gaps. So on a higher time frame, this fair value gap would be one fair value gap, and price rejected beautifully. Again, all our conditions are met. Price here, you could have gone for a fixed 2R, and that would have hit. Okay, again, all within our kill zones, everything lined up perfectly. Daily open is under the weekly/monthly open. Perfect setup. So I'm going to show you guys one more example using this method, and we'll see what else I have for you. Okay, so same process here. We're going to look at the previous 3 candles. So here and this one right here. If you want to copy these settings for the gone box, you can copy them right here. And now I chose this example in particular because if you guys notice, this monthly candle here swept the previous monthly wick, which is even better for us. Why? Because that means there's no reason for the month or the next month to have any reason to come back down to sweep more liquidity, because it already swept the previous month's liquidity to go back up higher. So again, monthly candle closed over the body's wick, giving it a 90% chance that the next month will be bullish. So we can drop to the 15-minute time frame, my favorite time frame. And we just got to make sure everything lines up. So we got to make sure that the weekly and the daily lines are above monthly lines. Okay, so we're going to let price play out, and remember, we have to use kill zones for these things. Okay, so finally we're above the weekly. Took a minute, as you can see, all these days. So it took us a little while, but we're there. So now we can start hunting for some trades. Now, one thing is that we do have the weekly under the monthly, so I'm actually still going to wait a little bit more. Okay, so finally we have the weekly above the monthly again. And if you guys are having problems finding a setup like this on one pair, just move to the next one. So once again, monthly, weekly, and then we have to have daily openings above all these opening lines. So daily with the weekly. I'm gonna skip on this because it's Monday. Mondays doesn't really give that well of conditions, so we'll see what we can find next. So daily 4:15, right? So 7 a.m. All right, so I can already see a good setup here. So usually 7 a.m. is the kill zone time I wait for. Now right off the bat, I can already see price is respecting this gap here, and it seems like it's respecting the order block here. So with this nice strong engulfing candle, I mean, I can enter here, either stop loss under here, but you know what, I'll put it there, and then I'll probably just target this high for a quick 1 to 5. Does not have to be anything crazy. Okay, so keeping it at the 1 to 5, as you can see, we found a trade targeting this little high right here, and thankfully, since I didn't go for anything above the 1 to 5, I would have gotten stopped out if I would have gone any higher than that. But as you can see, it works, and instead of having to wait so many days or even weeks to find a one setup like this, you can just move to another pair and see if you can find it there. But the point is, it's not that difficult. All you have to do is look for these specific criterias, and I'm pretty sure you'll find something. Just open up a chart, back test it if you have to, and you'll see just how easy it really is to use these types of models to find your buys for the day. And this works on anything else other than the 15, 5. You can even drop down to the 1 minute and even seconds time frame. Okay, so I'm going to show you one more example, and I hope that this next example could be used to clear some questions up. But so far, if you do have any questions, please let me know in the description. Let me know in the comments. Look in the description for some of my favorite backtesting platforms. And again, guys, ask questions, join the Discord as well, which will be linked in the description below. Okay, so real quick, just one more example. So this is towards the beginning of the new monthly and weekly open, but as you can see, we have the monthly and the weekly. We have the daily above it, and if you're someone that trades on the 1 minute, well, I got something very easy for you. What we're going to do is use A.C.T's macro times. We're just going to mark up our chart. So I have a demand here, an imbalance here, and what we can see as well is that price already tapped into this order block. But you got to be careful, guys, because these order blocks can also turn into liquidity. But just for this example, because your boy cherry picked it, obviously, we're going to put our limit order here, and we're going to target these highs. Now, I know I'm breaking my 2RR rules, but for this example, you can use it like that. Or if you want, you can enter at this engulfing candle as well. Stop loss under this low, and then you can target this high right here as your take profit. And next thing you know, bam, real easy freaking money. All right, so again, daily was above the weekly and the monthly. Why? Because the previous monthly candles were all bullish and they all closed above each other. And you can always apply model 1B as well with it to add as a further confluence. Now I will add one more example, but this one is going to be more of a freestyle kind of example, and I'm going to show you how you can use A.C.T as a way to find a trade almost every day, no matter what conditions you see. So let's move on to that next portion. Okay, so I am going to show you again a more freestyle kind of way of trading with my A.C.T theory. So we are still going to be using the same stuff I've taught you, but it's going to be more of a free form. So I hit random bar, we're going to go back in time randomly, and what I'm going to essentially do is find a higher time frame candle that can tell me what direction I'm going to go into and whether I should be looking for buys or sells. So starting off, I'm going to start off with the 4-hour candle. Okay, so I'm not getting much clear direction, so I'm going to go to the 6-hour, and I'm only choosing the 6-hour because I'm just used to that. Nothing there yet. How about 8-hour? Nothing there yet. 12-hour, nothing. The daily. Okay, so what do I have here? This candle's high and low. It's going to be marked up, and as you can see, it did not close above it and it closed bearish. This candle right here. Okay, so now what we want is for an open. So we're going to have the daily open here, or you know what, I'll just use the indicator that I was using earlier. And we're only going to use the following opening to find a trade. So I'm just going to use this as an example. Now I'm going to drop down to the 15, and we're going to wait for a kill zone time. So we're going to wait until this day gets filled up, finishes filling up. Okay, so we got to look for sells. Okay, we got to look for sells because of the previous candle, right? So 9:15. Oh, I forgot to turn on my kill zone. Okay, I think we should be good. 5:30. Okay, so 7 o'clock. Okay, so what do we have here? Price seems to be reacting favorably from this area. We have breaks of structure. Let's break here. And it looks like this fair value gap is being inverted. So as long as I see candlestick confirmation, I will be entering a sell. Okay, well I was gonna enter here, but CNS price played out too far. You know what's good, I'm still gonna enter from here. Stop loss up here, and I'm simply going to target 2R. Bam. 2R. I don't know why my kill zone is still coming up at 8 a.m. but point is, my kill zone time is usually at 7, but it was 7:30 here. Price was reacting favorably, and really easy stuff, right? Really easy stuff. If you want, I'll do one more example and then I'll call it a video. All right, so let's jump on to that next example. Okay, so for this example, we're gonna go back into bar replay, random bar. All right, so for this example, you do not have to use kill zones. Now, why do I say that even though earlier I said you must use kill zones? Well, the reason being is because since this is more of a freestyle approach, I'm going to make it to the point where it's like, if you need to have one trade, or if you want to build a system outside of kill zones, it is technically possible. Okay, so what do we have here? Price is reacting off of this fair value gap. It looks like we might be going down. To confirm this, we're gonna wait one more day. You could go on the 4-hour and get earlier confirmation, but if you want, we can wait one more day, and that way it's more secure. Okay, we're gonna wait another day. Okay, so now we got some confirmation going. Now remember, I said that if price does not close over the wick, it is a 50% chance that the move may plan out. But if you want to wait, you can wait. But we have confluence with this fair value gap being respected, so I don't see why we can't get into a play on this one. So I'm going to use the daily opening line again. And if you want, guys, you could also use the 3-day time frame to kind of add a little bit more confirmation. So as a matter of fact, if you want, we'll just use the 3-day time frame. As you can see, it went lower, and this is what I'll do. We will use that right there, and I will also draw it up from here. So I'm going to drop down to the 15, and that is 3 days. This would be 3 days worth data. So 18, 19, and I'm going to wait for the 20th to fill up, so that way we can get 3 days worth of actual data here. Okay, so now we're going to be again looking for bearish setups, and we're going to wait for that next daily candle to open up. Okay, so again, we're looking for sells here, and this can be outside of your kill zone times. But for me, I'm going to wait until the proper trading window appears, which is like, it can be 7, it can be 8, or I'm just going to wait until something I like appears. So I already see something. I see this break of structure here. Price is reacting pretty well off of this order block here. So I'm going to enter short off of here. Let me zoom in for you guys. Off of this candle right here. Stops are going to be at this high. Now, since this is a 3-day candle, and again, so this is more of a freestyle, you can target 3 days worth of data, right? So you're going to be holding this for a while, but you're getting in at a really good time. The only thing is that you guys might have to manage risk if you're doing something like this. So the higher you go in time, the more you'll have to manage. So we're just going to let price play out. So you can see price is breaking structure. I'm going to move my stop loss here to this high right here. Let's keep it going. Let's keep it going. Okay, great. Now I'm going to move my stop loss to break even. Let's keep it going. And it's up to you how much you want to take out in terms of like position. Okay, cool. So stopped out at break even, but as price was continuing, you could have taken out a little bit of pieces here and there. So let's say you didn't want to target the whole piece with all of your money. You could have just taken out like 80% at around, let's see here, hold on, let me put it back to where it was, at around 2R, and then that's where you could have left maybe 10% of your money running. So here you would take 90% out and then moved it to break even and targeted these lows, targeted these lows right here, yeah, those lows right there, and then have that 10% running, and you would have been stopped out here, but you would have already made so much freaking money that you only would have lost maybe 10%. right? 10% of whatever position you had left open. But that's it. It's not a big deal. But that just goes to show you that you can find a trade using advanced candlestick theory, and you can also use it as part of your bias. You don't have to hold your trades that freaking long, but if you do, just make sure you do manage risk, okay? Otherwise, you're going to get stopped out and lose all your money. All right, so I hope that answers all your questions. If you have any questions, please let me know down in the comments below. If you guys have any ideas or stuff you want to add to this model, let me know in the Discord. I would love to hear you guys' feedback. And if you just have questions in general, even outside of the daily bias stuff, message me on Discord, send me DMs through Instagram, Twitter. Just find a way to get in contact with me. But if this is too confusing for you guys, please let me know, and I will do my best to get back with you and answer all of your questions. And don't forget to backtest, guys. Don't just take my word for it on these models. Backtest, backtest, backtest. Like I said, I have discount codes already embedded in the links, so just click down in the description below where I have all my different link pods in, and it'll take you to all the different platforms that I use. And yeah, guys, that's all I have for you. Take it easy, stay blessed, and I will see you all in the next one. Peace.